my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of Brent crude oil and spot gold. ICE Brent crude oil futures. An interesting combination yesterday. It was a third countering bullish thrusting pattern that could also be seen as a possible indecisive spinning top. Prices opened below the 50% Fibonacci line of September-December 22 move at 84.99 and dipped down to the first of the moving averages, the medium moving average, currently at 84.60, but then pulled higher to still close over the 50% Fibonacci line. Overall, we still have overhead the changeover gap from late April, originally between 85.89 to 87.46, which hasn't been filled in by much, plus the October 2018 high at 86.67. More important, it was yet another close over the dark blue upper trend line, currently at 80.43 of the April to June bearish expanding wedge pattern. Now, taking a step back for a moment, in very early May, the market broke down below the bright red highlighted December 2023 to late April 2024 lower bull channel line, and this gave some potentials below for this pattern. The primary target in the 78 zone was reached, but the secondary harder to reach target X2 down in the 72.30 zone, well, that is still live, though I am increasingly debating whether to retire this potential target given the recent break higher. Additionally, we had a mid-March to end of April head and shoulders top with a purple neckline that is just above the market, currently at 87.43. This, along with the October 2018 high at 86.67 and the 50% Fibonacci line in November 2020 to March 2020 move at 87.41, all these together provide the next set of resistances on any attempts to fill in the overhead gap. And that gap is very important. I'll explain very shortly why. However, this is not the end of the matter. You see, this break higher from the dark blue bearish expanding wedge pattern still gives us some potentials topside. Thus, a primary target X would be in the 89.45 area, with a harder to reach secondary target X1 up in the 92.05 area. Again, that is not all. You see, I've been studying the action since April quite closely, and what I had initially thought might be a bearish halfway hesitation has morphed and developed into a late April to date diving board pattern, which goes a long way to explain the cause of the recent bullishness. And finally, well, almost finally, we are set up this week to make a month of June a possible monthly key reversal. Thus, if we have a close on Friday the 20th of June over 87.86 or under 81.62, then we're beyond. Now, right now, we're looking at a possible lesser outside month pattern, and we will continue to do so unless the topside gap is filled in. So far today, a lower open, but the market gathered its strength and tried to move higher towards the peak of yesterday's range. Spot gold. A significant bearish black crow yesterday that dipped and closed below the important 50% projected Fibonacci line at 23.01 and was halted by the dark blue highlighted April to date neckline, currently at 22.91. The significance was that it was a second consecutive close below the bright red lower time, currently 23.43 of the early October 2023 to mid-February 2024 bullish Andrews pitchfork. Overhead, we also have the green highlighted short medium moving average, currently at 23.41, whilst below, well, the market closed below the old projected 50% Fibonacci line at 23.01. And apart from the dark blue neckline, we don't have much below until the combined rising medium moving average, currently at 22.54, and the neckline, currently at 22.52. And that's of the August and November 2023 reverse head and shoulders pattern. Now, I should explain my inclusion of the dark blue neckline. In a discussion amongst some technical analysts, it became obvious to some that we had a possible April to date head and shoulders top. Now, I am not completely sold on this idea, though I do see the merits. To me, the action looks like a possible double top type pattern action, but having the same neckline for both highlighted, well, does it really help? It does actually help in matters, I think. Now, so far today, a higher open, a move back up over the 50% projected Fibonacci line, which doesn't help matters for a head and shoulders top or a double top action. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast.
Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.